Hey traders, welcome back to another video. So 18 months ago, I took on a new trading account and I placed over 2,300 trades. And they all had one thing in common: negative risk to reward. Now, if you don't know what that is, in this video, I've got you covered. I'm going to explain everything you need to know about negative risk to reward. We're going to talk about the good. We're going to talk about the bad. We're going to talk about the psychological hangups that you get through trading this type of system. I'm going to show you the account. I'm going to show you the history, the biggest wins, the biggest loss. You'll see the full equity curve in the hope that you can take something from this and challenge your belief system that maybe we don't always have to risk one to make two, or one to make five, or one to make 59, or whatever it is that we do, right? If you like this kind of content, feel free to subscribe to the channel, give us a thumbs up. Any questions, drop them in the comment section below. We'll get into it. So here we go. Right at the start, I'm excited for this one. If you can't tell, this is by popular request, and this is what I do. I like this kind of stuff. Anyway, stop rambling. Get on with it, Rich. Yes, sir. On the chart, you should see a wonderful equity curve. Now, this equity curve is what dreams are made of. We can see right at the beginning, this is your number of trades right at the bottom left here. And we can see right up to about 67. It looks pretty cool. It goes all the way up and up and up and up. And every single time just goes up and just makes a little bit of money out of it. And this is fantastic. Now, if we fast forward a little bit, suddenly the same equity curve looks like this. Now, what exactly happened? So we can see that we got this wonderful equity curve that goes all the way up and up and up, and then it just absolutely drops off a cliff. Now, I want you to pay attention to the trade number. This is trade number 100. So you can see I was pretty new to this kind of system. It was nearly a year and a half ago. In fact, I showed this to a friend of mine, and she said, "Oh, I'll explain more about that later." So by trade number 100, we can see that we have absolutely gone through it, and we have lost so much more than we gained. In fact, I don't think I had a losing trade, or didn't really take much of a losing trade, for about 80 trades in a row. Then something went wrong, really wrong. And I sat there and I kept thinking to myself, if you can figure out what you did well in this up here, then maybe you'd have a slightly different result when it comes to this here. So before we go any further and I show you the continued journey of this account, I want to explain exactly what negative risk to reward is. So what I'll do is I'll pull up my chart and I'll show you and explain it in real time. That way we're all on the same page, because it might mean something different to me than what it means to you. So here is my chart. Here's my face. Here's my chart. Okay. Now, negative risk to reward or positive risk to reward effectively means this, where we're looking for the market to come down and we're going to buy at a certain level. For example, it could be this. And we're looking for the market to go up. And if we can make the same amount as what we're risking, we make 1-to-1. So this is the distance from our entry to our stop loss. We could be risking $100. We could be risking $1,000. It doesn't really matter. But obviously it matters depending on your account size. But for this example, explaining risk to reward, you're risking the same amount in distance as you are to your TP and your stop loss. Okay. Now, if we were to go to 2-to-1 or 1-to-2, sorry, as I've recently been told, it's actually 1-to-2, not 2-to-1. I always used to get them confused. Now, 1-to-2 risk to reward is where you're risking the same amount, but you're looking for 2 times the gain. And then you'll get 1-to-3, where you're risking the same amount and you're looking for 3 times the gain. Now, I would say the majority of traders will resonate with this kind of approach. And I've heard it said many times before that actually you need to have a 1-to-2 risk reward, or a 1-to-3, or a 1-to-5, or a 1-to-27. Whatever it is you do, you need to be making more than you're losing. Now, the problem I have with this kind of system is the market very often comes back and it goes like this, and we go all the way up and the market just rolls over and goes to stop loss. And in this journey here, I start experiencing so much kind of, confidence. Good, the trade's running in my favor. I'm going to get paid from this one. This trade's going to keep going up. And then when it doesn't, I lose all this floating P&L as well. So this is what we call positive risk to reward. And I would argue that 90% of traders that I've met have traded this kind of approach. They're willing to risk just a little bit and they're trying to catch quite a lot. And then obviously we've got the traders that just do stuff like this, and they're interested in like 1 to 11 and all that kind of stuff. Typically, the bigger your take profit is relative to your stop loss, the lower your win rate is going to be. Now, I'm going to say that again because this is crucial that this just clicks. If you are risking only this much to try and make all of this, you're gonna win less often. But when you win, you're gonna get massive wins. So your drawdowns are gonna be worse because your win rate is gonna be worse, which means you're gonna need to risk a little bit lower to try and keep your account nice and safe. So now I'm going to explain to you what negative risk to reward means to me. Negative risk to reward, we'll start with 1 to 1, is this, is where you're looking for risking 1 to make anything less than 1. So that would be negative risk to reward. That would be negative risk to reward. And now we can understand that by going negative risk to reward, what we're actually doing is we're increasing our win rate because price doesn't have to travel as far to hit our take profit. However, when the market goes down and hits your stop loss, like if it was just to turn around and do something like this, go into your entry and just go straight to your stop loss, you're going to end up losing more than you make. Now, the cool thing about this is it works if you have a high enough win rate. So you need to be able to put your trades in good areas where you can get a little bit of a movement without taking too much of a loss. Now, this is exactly what I've done on this account for over 2,300 trades. It's taken me nearly a year and a half, and I'm trading this thing most days. I trade it very, very different to how I trade my main style of trading. And it's something that I would say it takes a little bit of bedding in period. And the psychology needs a bit of a tweak as well. And I'll explain why. So imagine that we're trading positive risk to reward. So we're risking 1 to make 2, for example. Now, the amount of times the market will come in and go up and then kind of tease your take profit and then start to head back down towards your entry or towards your stop loss. Now, this here to sit through a pullback in the hope that the market then goes up to the high side takes good psychology. Now, the cool thing about trading negative risk to reward is a lot of the time when you're trading like this, the market will come into your entry, and by the time it starts pulling back, you've already been paid. Now, let's talk about the times where the market does this. And I'm going to go ahead and pull up on the screen, and I'm going to show you some real results of the days that I've had while I've been trading this account. Because if you want days like this, or this, or this, or this, you need to be willing to sit through days like this. And that's the reality of trading negative risk to reward. You're going to have a nice high win rate, but when you get it wrong, you get it wrong. And easily you can wipe out a week's worth of profits in one bad trade if you're not willing to let go of it. So let me go back to this equity curve here. And this is exactly what was happening with me. I was getting in the habit of winning and winning and winning, and I was like, "Yeah, this is fine. This is good. This fits me really, really well." The feedback I was getting was that I was making money most days. Fantastic. And then I had a trade that started to go against me, and I held on to it. And I held on to it and I held on to it. And by the time I was willing to take the loss, I ended up wiping out all the profits and then some. Now, I was able to do a bit of journaling around this and figure out what I'd done wrong technically. And what I did is I relied on my emotions while I was in this trade. And my emotions, especially when we're in drawdown, they didn't serve me very well. It was like, come on, just hold on to it. Hopefully it will turn around. You've had 80 trades back to back. You haven't had any losses. And all of a sudden, why would you take a loss now? Surely not. And I watched the P&L go negative against me, and it kept going and going and going and going. Now, sometimes with negative risk to reward, we can actually place more than one entry, but that's a story for another day. I wanted just to talk through the general kind of consensus of exactly what this process is as well. Now I still typically go for something like this, but instead of trying to bring my profits down, what I'm doing is I end up putting my stop loss much, much wider. So same effect, we're still risking quite a bit more than what we stand to make. But the win rate on this kind of stuff is pretty good. Now, if you can get it right, and you can technically get it right, and you're willing to cut the trade when you know you're wrong, you can do okay. And so I want to challenge the typical belief system that we've got to be going for positive risk to reward because this is a different approach to trading. So it's not going to be for everyone because many traders they want to get in and they want to hit these big home runs, and that's fine. But I would encourage you to ask yourself, are you getting the results in your trading that you want? Now, I know that I've been trading for 6 years, and when I used to trade like this, typically I would just win one, lose one, win one, lose one. I'd be stuck in that cycle of not quite feeling like I'm getting the kind of traction I wanted. So I started to bring my take profits down to 1 to 1. And then I got a higher win rate. Now, when I take 3 or 4 losses in a row, it can still take me quite a while to get out of drawdown. But what I noticed is a lot of my trades were starting to come into, if we can get this back somewhere, I'm going to keep spamming this button until it does something. There we are. A lot of my trades were starting to do stuff like this. And then we have that mystery where it either goes sideways and it either goes up or it goes down. And I didn't want to sit through this. Now, one thing I started getting much, much better at is picking my entries. As I say, I've been trading for 6 years. I started playing around with this concept on this account a year and a half ago. And I'd only been trading about 4.5 years at the time. And the concept of negative risk to reward was something I'd always been curious about. And I always wanted to play around with it. So I needed time to adjust. I needed time to learn how to let go of my losses quickly. I needed to know when to get into my trade and leverage it. I needed to be happy with gains that I made on a day so that I wouldn't get overconfident and over greedy because there'll be days where I'll have a 100% win rate. I might put 15, 20 positions into the market and I can get out with not just a net gain, but I won't take a loss. But I'm ever so respectful that that one loss can come along and it can take away the kind of gains from the account. It can wipe out a whole day's worth of profits just in one move. So I need to be very, very light and agile. And typically, how I do this is I use lower leverage. So what I'm going to do now is I'm going to show you where the equity curve is now after 2,300 trades, because I've been challenged directly that negative risk to reward is not sustainable. So let's start with the starting equity curve. This is what we see. Market is just going up and up and up, and we think that we're just going to get paid forever. We then moved into this chapter where I held on to a loss and just absolutely got it wrong. Now, I knew there was something good in this, and I had to just try and figure out how to do it. Now, I still do not have this dialed in. Being a discretionary trader that trades just based on the feel of the market, trying to put them puzzle pieces together each day and figuring out, where would I put a couple of little orders? How would I manage them if they went into profit? How would I manage them if they went against me? So fast forward 18 months and add another 2,000 trades to this number at the bottom. This is how the equity curve is looking now. So that's what we're looking at the moment. This is a state of the account. Now, there's one thing I want to bring your attention to, which is absolutely crucial about this. You see this right here. You see this little drop that just goes here. That was this. That was this right here. And the biggest lesson that I want to go ahead with this is I want to explain that when we go through this, not just in a trading account by taking a couple of losses, when we experience this kind of pullback in our learning curve, I want to encourage us to step back. If you're not getting the results that you want right now, let me go ahead and pull up this other chart. Then just recognize that right now, that pullback you're going through in your big journey is going to look like this little bit down here. And that if you keep working on your craft, if you keep watching content like this video and allow yourself to just sit with it and say, I wonder if there's something in it. What would it look like within my trading? Could this help me? Would this not help me? How would it look? Don't have an emotional reaction and say, absolutely not, it doesn't work. I'm showing you a chart on a screen that over 2,000 trades shows you information to say, hey, maybe there's something to this. These are all trades that I've been trading live. I've been taking these trades on my account in real market conditions, and I've been managing risk and learning as I go. So if you are not getting the results you want and you're in this area here, zoom out and start putting in that quality work that's actually going to help you as a trader. I mean, you can see this was just a little pullback. Went through another one here, had another one over here, another one over here. This was all a big bit of chop. Don't really know what was going on over here. And then another one here. It's going to happen. But over time, if we continue to work on our edge, if we continue to develop our skills, we get to a state where we can make a little bit more than we lose. But to get to that state, we've got to make sure that we're not being revengeful, we're not being fearful, we're not being FOMO, we're not doing all that silly stuff within our trading. So this is why the channel's called Take Action Trading. It's a reminder to myself to do the quality work that's actually going to help me as a trader to grow. And that equity curve is just a byproduct of it. Am I in my polished state? Absolutely not. In fact, I'm going to pull it back up again. I might be somewhere around about here. I might be about to go through another little pullback. But what I know is that in my career as a trader, I'm going to zoom out and I'm going to look at the big picture. And even if your P&L isn't directly moving in the way you want, invest in yourself, invest in your education in trading, invest into your journey as a trader so that this knowledge is always expanding. And then you can get yourself into a position where you will thank yourself for it in the future. I'm not where I want to be. I'm still a student of the markets, but I am always learning. I am always growing. I am always actively putting in that kind of work. So I've got some stats for nerds, and I'm a massive nerd. This is everything that's happened on the account. Feel free to pause the video if you want to have a look at the stats in a little bit more detail. Then we've got these stats over here, which show all sorts of weird and wonderful things, sharp ratios, recovery factor, profit factor, I understand, but all these kind of other stuff. There's a whole lot of stuff in there that are a little bit new to me because, to be honest, I spend more time developing my trading, my systems, my risk management, and my psychology than I do looking at these numbers, which are a byproduct of it. Obviously, we can see down here profit trades, 71% win rate. We can see total trades taken, 2,325, 5 average wins in a row, 2 average losses in a row. Largest loss, a little over $300. Largest gain, a little over $400. Average profitable trade. Now, this is important. Average profitable trade, $14 right here. Average losing trade, $24. This is the trade-off with negative risk to reward. If somebody says, I can show you that I can average $400 a trade and only lose $200 a trade with a 71% win rate, run. Or tell them to show you more than just 3 trades. Ask them to show you thousands and thousands and thousands of trades. This is why I wanted to show this stuff on stream, because I'm passionate about this kind of stuff. There is more ways to get yourself into a profitable position, and it doesn't have to be always following the norm. And that was the goal of this video, is to try and create a space where I could challenge our ideas of what makes a profitable system profitable. We talked about different risk management ideas. We're talking about how to hold on to losing trades for way too long and wiping out all your profits. They're not FOMOing after that, plus revenge trading and all that kind of good stuff that goes with it. Now, I would love to encourage all of you to just grab hold of that one thing that can help you as a trader and to take action on it. One thing I do incredibly well is I have an amazing support system. If you don't know who this support system is, I'm going to go ahead and bring her up on screen right now. Her name is Anna FX. Go ahead and subscribe to her channel. She is a phenomenal trader. She's a really, really, really good trader. Anna and I have a community that we open up towards the end of the month for new memberships. It's all based around accountability and great trading processes. If you feel that you need a little bit of an encouragement within your trading and you're not getting where you want to be, go and check out the link in the description. Check it out for yourself. See if it's something that resonates with you. Now, so if you've got any questions about this kind of stuff, feel free to pick my brains in the comments section. I'll do my best to get back to you as quick as I can. For everyone else, thanks ever so much for making it through the video. Please click the subscribe and like button. Apparently, it helps the channel in some ways that I don't understand. And I will catch you in the next one. Cheers.